Hello, welcome back to Stock Shark. In today's episode, we will be looking at the best investment options available for securing the financial future of your children. So, this is a long term asset allocation idea. Let's dive into the overview. What we are trying to accomplish here is wanted to make sure the portfolio is almost contains very low risk or risk free investment. Also, given the pandemic situation and easy monetary policy, how do we beat the inflation? So the whatever asset allocation we will be coming up with, that should be very sound and withstand the inflation, higher inflation that we would be anticipating in next few years. So idea is to come up with the right investment allocation, and it should grow the portfolio but with moderate risk, but it should withstand the higher inflation that we are anticipating in next few years. So let's dive into the options available. But before that, look at the inflation rate trend in US for last 25 years. If you look at in 2008, it spiked up around 6%. Again in 2021, where we are now, it spiked up around 6%. It's very bad, because our most of the investment returns in the range of 0.5 to 4% or so. Then the real return would be lot less or negative, we would say, right? Unless you beat the inflation, the real return won't be positive. But good thing is, if you look at average trending, barring this 2008 and 2021, it's been hovering around 2%, right? It's throughout, from 2008 to up until 2020. If you look at, it's been around 2%. So but there is no guarantee, right? It will come back to 2% from 2022. So but I'm anticipating interest rate will be, anywhere between 4 and 3%. That is where it would settle, because we have been having extreme easy monetary policy in last 1 years. Trillions of dollars are printed. That money finds somewhere and something, and it would cause the inflation to be stay very stubborn around 4%. So keep in mind, that particular scenario. So we have to come up with the right investment allocations, that should beat this inflation rate of around 4%. Let's dive into various investment options available today. The first one is bank deposit. Most of you familiar with this is certified deposit. The second one I will be covering is US government treasury bonds. Then the municipal bonds that is issued by your the states. Then you have a corporate bonds. Again, it has both investment grade and high yield. Investment grade is coming from good quality corporates. High yield is kind of, we call it junk bond as well. It's coming from so and so corporation with questionable credit quality. Then you have regular equities, ETFs, index funds, etc. Then the sixth asset class is your the recent trend, like in crypto, right? But gold and real estate also come under the same alternative investments. So the crypto, gold, real estate, I group it together as one investment class one can consider. So let's dive into each one of those options, and please listen carefully video throughout the session, so that when we come up with a right asset allocation for a given scenario, you will get the context properly. Otherwise, if you keep skipping, you may not get the context. Let's look at the fixed deposit. Yeah, it's a very safe, low risk, but and also it's FDIC insured up to 250K per person, 250K dollars per person. That means if you are a joint holder, for example, husband and wife together have a joint account, that means they are covered together 500K or $500,000 by FDIC. And but the disadvantage is it offers very low interest rate, 0.1% to 0.8%. So it won't beat the inflation. but it's very liquid though. You can break the CD in case of emergency, and you can get back the the fund. And however, when you open up, even though it's a very safe, yeah, but when you open up fixed deposit, make sure the bank you are opening, it's actually registered in FDIC, and you can go to FDIC website, and you can make sure they are covered. And I would recommend always go with well established banks like Capital One or Marcus or JP Morgan, Bank of America, Wells Fargo. These are all the established banks, and like Citibank and those type of banks. You can check their rate online as well, how much they offer. One can actually open up the account online itself. It's very safe, if you, as long as you go with established banks, and go with only up to FDIC insured amount. Then if you are exceeding, then put the money into some other bank again with that FDIC. You will be covered for that account as well. So this is very low risk, low inflation, low risk, liquid investment, but it won't beat the inflation. So that is about fixed deposit. Let's move on to US Treasury bonds. You can buy actually US Treasury from treasurydirect.com, which is operated by or governed by US Treasury directly. And it's a very safe investment because it's backed by US government. But the bad thing is it won't beat the inflation because depends on the tenure of the bond. It offers anywhere from 0.2% to 3% yield. So the return is very low. You may not able to beat the inflation. And if you don't like buying this directly from Treasury Direct, then you can buy some US Treasury based mutual funds or ETF. One of the example I mentioned here is TLT, that offers around 2 to 2.2% yield, and it's very safe investment. And one good thing about is it is exempt from your local state tax, but it's subject to your federal tax, but state taxes are exempt if you invest money in treasury bonds. This is about US Treasury bonds. Let's move on to the next one, the municipal bonds. See, the municipal bonds are issued by your local state agencies. Again, it's liquid and safe investment, but the rate is again very low, 0.5% to 2.5%. And you can buy this municipal bond directly from various brokerage platform like Fidelity, Vanguard, E-Trade, Ameritrade, with the n number of brokerage platforms. And there are tons of mutual funds available in Vanguard or Fidelity or other PIMCO, etc., where they offer mutual funds specific to your state. But good thing about municipal bond is that the yield you get from municipal bond is exempt from your state and local taxes as well as federal, right? Federal taxes. So it's ideal for someone with high earning capacity. So if your family income is really above national average, and if you are end up paying a lot of taxes to your state, then investing some money in municipal bond is really good thing. Let's move on to corporate bonds. See, corporate bonds, again, it has two flavors. One is investment grade, the other one is high yield bond. What is investment grade? Investment grade is the bond issued by the companies that have really credible credit quality. So they offer, but they offer very low rate, 0.5% to 1%, maybe 2%. Some of the companies in the investment grade categories are like Apple, Microsoft, or Disney. Those type of companies, they are very carries very good credit quality and safe investment. High yield bonds are the one issued by corporates with so and so credit quality, for example Tesla or those type of companies. But they offer very high interest rate on their bonds. So I wouldn't buy these bonds directly because it's a bit risky. But you can buy either various mutual funds that caters to particular corporate bonds. If you could go to Fidelity or Vanguard or E-Trade or Ameritrade, you can search investment grade mutual fund. You get varieties of funds. Or if you don't like mutual funds, you can always go with ETF as well, like liquid LQD. That's an investment grade bond that offers around 2 to 2.2%. JNK junk bonds, there's a high yield bond. That's again, that ETF offers around 4% yield. And then you can go with PHK, that is offered by PIMCO. It's a PIMCO high yield bond that offers around 8% interest rate. So there are various options available. And this actually corporate bonds will beat the inflation, but you have to make sure choose the right right bond, mix of bonds to get into the right interest income to beat the inflation. Let's move on to equities, ETF, mutual funds. There is no brainer here. Everyone, most of you aware of, various equities available, ETF available, mutual funds available. But again, if you are really aiming for, children future, don't put entire money into particular stock. You never know, right? That stock could go zero or could default, so, or could go bankrupt. So don't put money into particular individual stock. Rather, you can own the mutual fund. So that would limit the risk. But still, this asset class comes under high risk investment. I would suggest buying ETF like SPY, that is an index fund, right? Index fund ETF. Triple Q is Nasdaq 100. Those type of ETFs actually do well, and also very liquid. You can come out if you need to get the funding for any emergency reason. And also this is a right asset class to beat the inflation, even though it's high risk investment. Let's move on to another asset class, that is alternative asset class, that contains crypto, gold, real estate. Again, you can buy all this asset class from various brokerage platform. Average gain, this is historical average gain, right? Anywhere from 0% to 20%. Usually, it comes under a 10 to 12% gain, and it does beat the inflation, but it's a very high risk investment. So you should know the investment risk. So you can allocate maybe 5%, 10% of your portfolio into one of these asset class, so that your risk will be limited. And some of the examples: BITW is ETF for crypto, GLD is a gold ETF, IYR is a real estate ETF. The reason I mention ETFs are something you can buy as if like you can buy individual stocks, right? That is the reason I put this ETF example. But you can go to the platform, the brokerage platform, and you can buy individual crypto or gold, or or various real estate shares. But when you go to crypto, there are so many cryptos available, but I wouldn't go beyond Bitcoin or Ethereum. Those two are very established players, and other cryptos are very risky. I mean, overall crypto itself very risky. And if you go outside of these two cryptos, like Bitcoin and Ethereum, it's even very high risk. That is how I would put it. Let's look at if you have $25,000 and you want to plan for 10 years, right, to grow the portfolio, where you would allocate, right? So that means let's say your daughter or son is 8 years old, and by the time they reach 18 years, or maybe 17 or 18, they would go to the college, right? So you want to make sure you have some funding available for them to pursue their higher education. So the goal is, you have 25K now, and you want to see, how would I allocate this fund for next 10 years, and what would be my return at the end of 10th year. So if you look at, I created a sample allocation. You can put, if you look at here, I put 52% in fixed income, 28% in equities, then I put 12% in crypto, then 8% in real estate. So based on this, if you look at, I put $2,000 in the CD, that 2-year fixed deposit, 2-year certified deposit, that yield 0.4%. Same thing, US Treasury 5-year bond, that offers 0.74% yield. LQED is your investment grade bond, 2.4% yield. PHK is your PIMCO high yield bond, but I put very small money, right? PHK is very high risk investment because it's a high yield bond category, but that offers very high yield, 8% yield. Consistently, it offers between 8 and 10% yield. So I put small amount, $2,000. So that means it's almost only 10% of my portfolio, right? Out of 25K. Then SPY is your investment, investment index fund ETF. That is SPY is Standard and Poor's 500 index ETF. So that average actually gives you yield of 8%. Then again, I put technology ETF called XLK, that gives you slightly a higher return. Actually, I would call these two are kind of medium to high risk category. Then Bitcoin, it's definitely very high risk. I put $3,000 there. Again, that carries about 12% of your portfolio. If you don't feel comfortable, you can replace this BTC with gold, because this model asset allocation is just to give you an idea, right? So if you don't feel comfortable in putting money in the Bitcoin, then you can either buy BITW, that is a Bitcoin ETF that covers 10 crypto coins in their portfolio, or you want to avoid crypto altogether, then you can buy gold here, right? That offers around 5% yield. So you can change it again. I put $2,000 in IYR, that's a real estate, or you can replace this with some other real estate ETF as well. But the ETF shares, the real estate ETFs usually gives you anywhere from 5% to 8% yield. This particular one specifically gives you around 6% yield. So if you look at altogether for total $25,000, your average yield would look like 5.4%, and that gives you $1,373 per year return. And 10th year, if you don't put any monthly contribution or yearly contribution, just put the money 25K with this asset allocation, 10th year it would value around 42K. It's not bad, right? You beat the inflation, because we are anticipating next 10 years the average inflation rate would be between 3 and 4%. So you still beat the inflation, or if the inflation rate comes back to 2%, you are really better off, right? Than 5.4% yield. So again, this is a model portfolio, how one should construct the asset allocation and to beat the inflation and have a moderate risk or a low risk to grow the portfolio. In the next slide, I'm showing you, if you have similar 25K portfolio allocation as I shown you in the prior slide, but if you contribute $1,000 monthly in the same portfolio, right, in next 10 years, how your portfolio return would look like, right? So with the future value of 5.4% or 5.4% per year yield, your 25K initial investment and with $1,000 monthly contribution, your portfolio would grow to 198K. That is almost 200K at the 10th year. So this is how you want to do that, right? So if you have a 25K and you want to have 200K portfolio 10 years from now, so that your children could go to college comfortably, or you want to retire comfortably, you can use this model. How your return would look like 10 years from now. So plan accordingly. But let me tell you one thing: investment requires patience. That means you aim to grow rich very slow. Any quick return, overnight hyped return won't last long. So very careful with long-term investment. make sure you put the right allocation, mix of fixed income, equities, alternative asset classes, so that you can continue to sleep well and also expect your portfolio to grow really well. All right, thanks for listening, and I really appreciate it. And if you like my video, please subscribe to my channel, and time to time I put various trading tips and individual stock tips as well. Thanks for watching.